All right, well, hello and welcome back to another daily edition of Stock Market Mutterings. This is for October 11th, where I'll do my best to try to find you some quality trade setups, explain to you the trades I have been taking and what I see out of the market and the attempts to help you make a little bit more money with your trading. If you need help with that, take a moment and visit thelincolnlist.com. Click on the Trade Room tab and you can start trading with us right away. Now, it's been a long week. It's been profitable every day. But it's been a long week, especially at my age, especially with this up and down action, this crazy volatility. So much so, I've got coffee in my cup instead of whiskey. And by the way, this is Pittsburgh Penguins Stanley Cup champion coffee to you guys. So let's talk about it because the selling continues. I think we're on day number 7. Don't quote me to that, but I think we're like on day number 7. Definitely the market's now reaching levels back to where we started at the beginning of the year. We're almost unched for the year. We might actually be there while I'm doing this. So it just continues, and it continues to have the same type of theme to it where I just mentioned at the beginning. You've got ramp ups, you've got rallies, you've got bounce attempts, but so far for the last 5, 6, 7 days, they've all been stuffed. They've all been rejected. So a lot of people come to me and they'll say, especially in times like this, because this is what's interesting about traders. They never reach out for help when the going's good. But when going gets bad, then everybody wants some help. You're supposed to educate yourself when the going is good on how to handle market corrections, how to trade through this kind of stuff. That way when it does happen, you're prepared. Again, I told that story so many times. That's what hurt me back in 2001, but that's a completely different story, and I ain't going back there on a day like today. But just here as a quick tip for everybody, it's really difficult to say this is going to be the bottom. You can look at certain areas on your chart like support and resistance, 200-day moving averages, which is something that we have talked about, but the SPY actually closed below that today. I mean, you can look at those levels and they could be reference points, but there's no guarantee that it's going to be an automatic bounce there. The key to a rally, or what you're going to need to say, look, this is going to be a sustainable rally, is one of these breakouts over the many that we've had over the last couple of days. You've got stocks that blew through high a day today and showed promise. But what ended up happening was they came back and made new lows. So the first thing that has to happen is the market has to stop making a new low. And this goes the same way when you're trading a stock itself, independent of the market. Maybe it's a bullish market and you're just getting drilled on a stock. The first thing it has to do is stop making new lows. Every bounce gets, like I said, that's been the theme. Every bounce gets stuffed and a new low is made. So for the last 7 days, if you just took every couple of green bars on a chart and threw money at it to the short side, you'd be making money. I mean, you could just throw darts at this point. That won't last forever, and I don't suggest doing that, obviously. But speaking the truth, that's the way it is. So again, right here where you sit today, you're looking at this 270, 250 where the market has closed. And let's just draw this line up here in the upper chart. You have this 270, 250 here at the closing, and then you have a low of 270. I mean, this is your area you really got to pay close attention. If you're gapping below that, or if you test that early and go through that, then you're really going to have to start looking much further back into these charts and look for certain areas where you might get bounced. And it may be all the way down to 265 and 260s. Again, it's all hypothetical. You'll have to see how things work out. The most important, though, is what's happening here in a lot of cases, I'm sure, with people and traders, is that these things are breaking out and people are chasing these green bars like this is the rally, but then they turn around and get sold off. So you had that today, like early on in the morning, you had a pretty good move here out of the market. I mean, it took off. It was really strong here early. It gapped up. It took off. But then here's what you're getting. And when each one of these sell-offs come in, like this little sell-off right here, each one of these come in, they make a new low. Like it didn't stop before the lows, make a higher low and then rebound. It makes a new low. Then it rallies again and it turns around and makes another low before the day's over. So that's going to have to stop first and foremost. So let's talk about what we did. Now, I've been saying I hate shorting in the hole, but if you're doing that right now, you could be a donkey and that's just working. I mean, you throw anything at low a day and it's just gone. So anyway, let's talk about what we were doing here in the trade room today, because again, another green day, so You know, I don't know how many, six in a row, 7 in a row. I don't know. Anyway, I got that stupid thing up there. Let me talk about this Apple, because I've been on this. I keep spelling it wrong. I've been on the Apple jock all week. I hardly ever trade Apple in an entire year, maybe 5 times, but I've just been on this thing locked and loaded for some reason. So what was happening here early is we kind of let things settle down for just a moment. You got some small pullbacks. And I started looking across the board, and the NASDAQ is ripping. And you got Facebook and other stuff, and some other stocks. I think Netflix. I always get Netflix and NVDA messed up. But you had these things taken off there real early. Yeah, it was Netflix. And then I'm just looking for one of these FANG beta names to just fire away. So this thing starts coming off at the bottom here, right off of this pivot down, which was very close to the support. So after about 15-20 minutes there at the open, it looked like this thing at least had a short-term bottom. Now I kind of like these trades a bit, because you can take these, and if you're wrong, then the base of support was down here at 212. So you've got maybe 90 cents in this to $1. And you know, if it just trades back up to pre-market high, that's 216. So that's a good risk to reward, in my opinion. Now this one worked out like a charm. It came right on up here, went vertical. I mean, again, another one that I think we did really well with, and we timed perfectly. But on the flip side of that, what I did is I took a little portion of that money off, like I have been saying, working these partials, keeping half or whatever, a little bit of partial, and just in case we get this rally. Kind of use air quotes, like this rally, the rally that's not coming, in case we actually get this monstrous turnaround in the market and we really get a lot of momentum. So each time I'm taking these trades, I'm looking for bigger premiums, or the possibility of bigger premiums. So in a normal market, I might be looking at maybe $1 on something like this, or $2, or a quick spike. But in every single spike like this, I think, hey, maybe this is the one that's going to turn this thing around and send it up $6, $7, $10 a day. We don't know. I mean, there's a lot of room to bounce the day the rally comes. But again, I keep getting stopped out on those second partials because the market won't hold. So as soon as it starts to fade, I didn't even wait this time. I just cut the position and took it. And, you know, that was that for Apple. And then, you know, I tried a little bit of this BA, same thing here. I was a little bit late to the table with BA, but it was almost identical to Apple. I mean, you know, the charts were just about identical. And it was the same thing. You just could not get that follow through. And then later in the day, stuff was down so far. I'm like, I'm not going down here in the hole and chasing it. Although that would have worked out. I mean, again, you're looking at these trades like, I mean, just the ranges alone here are off the charts. I mean, this bounce on Netflix, like for example, Netflix bounces from 320 to 333. You know, that's like a $13 rip in 10 minutes. Then turns around and gives it all back. So it's like 13 up, 13 down. If you can catch these things at the right times, then it's like, damn, you'll make a fortune. But right, if we knew what was going to happen, right? So anyway, that was just, it wasn't huge, not huge in the green department. It was like little poodle, like a little poodle green, dressed in one of those little outfits, like with bows on its ears or something. Nothing to brag about. But again, every trade I take here, every trade that I'm looking at right now, is that when it bounces for me in my direction, the first thing I do is pull some money off the table and bank a little bit of that profit. Then I just move a stop up to break even. Again, I normally don't do that, but in this case, I feel that there's a possibility with every trade that I take, like I said, that we could be at the beginning of a multi-day rally. So I could catch maybe a $15, $20 move on some of this stuff. Also, to the other side of that, I have to say that, you know, even though it's not something I enjoy doing right now, that low of day, bear flag, shorting has been the ticket, or just basically shorting anything that has ripped, because all this stuff took off today. And again, when you're thinking about trading in general, and you're trying to think about where's the market going to go, what's my next move, a lot of this stuff doesn't rely on technical analysis. It comes down to common sense. I mean, just think about what happened today. And you started out with a rally. You know, the market bounced well off the overnight lows, started out with a lot of volume buying and a lot of interest. And I mean, a lot of stocks went from red to green across the board. And this is an event that's happening after a 6-day sell-off. And if you can't hold that, I mean, if you can't, they all finish up red again. If you can't hold that, I don't know how in your mind you can translate that as a positive sign. Now, that doesn't mean we won't rip tomorrow or bounce, but common sense is telling you, you know what, that ain't good. Because in the past, you know, prior to this event, you know, in February, if you take those out of the equation, most of the time the market has done this. It hasn't lasted. It's bounced off of a lot of bad news before. It's rallied off the bottom. After a couple of days of sell-off, it's taken off, and people have paid high money for stocks and chased them at high a day and continued to chase those stocks and so on. And it's worked. That's been a formula. Right now, that's not the case. So again, if you're looking for that, I'm not a bottom caller or tell you when the exact bottom's going to be. I thought we'd see a little bit more excitement off the 200 moving average. We didn't. And the common sense, again, that's your best indicator. Common sense is telling you, hey, no, it wasn't happening today. It was just like yesterday with us. We tried a few times. We got some really nice trades. We tried to be patient with a second partial or a second piece of it to get bigger gains. And that's 2 or 3 days in a row. That has not worked. They have come back. So yes, at some point that will stop. But for right now, the common sense is telling you, man, the market's not done going through whatever it's going through here. There might be more downside. The day the rally comes, we'll be there ready and waiting and with a plan, but we still have to have a plan when it doesn't. So until you see that key right there where it's able to hold a gain and then make another gain on top of that and hold that, then, you know, it's going to be the same thing. Every move's going to get stuffed, more selling's going to continue, and we're probably going to see lower prices in some of this stuff before the market makes them attractive. Like I said before, the market will rally prices high enough to make it unattractive, which seems like what it had done, and then they'll drive them as low till everybody starts stepping in going, okay, now this is way too much. These prices are too cheap. So that remains to be seen. Now going forward, there still are some really nice looking charts. If you're into the bull side of things, I think you saw a really good day out of AMRN here, and it closed up towards the highs, you know, for the day. A little bit erratic, but I think that's what you're going to get anyway with anything in the market. But a stock here that seems to have maybe shaken out its sellers and printed a really nice day. Again, you need a little bit more data there tomorrow, but I think if you start sniffing around 20 again, you're going to see a lot of momentum come back into this. There are some areas here on some of these other stocks, like, you know, like BA, for example. It's sitting down here on the 50 moving average on a daily chart, but barely clinging to it. Apple has some pretty good levels right here, just down around this 211s to 210s. I mean, those were good levels, and they touch these areas. But again, going back to common sense, it just never really lifted off. It bounced off those levels, but it never really got far away from them. I mean, I haven't seen enough enthusiasm into those tech names, FANG names, beta names yet. Sure, the money will come back into them, but like I've been saying, the theme through this whole market mutterings is just, you know, nobody's interested yet. It's not enough to keep these things up. So we'll see how things play out tomorrow. Again, if you're looking for that, I'm not going to tell you what the exact bottom is because I don't know myself. But you've got to look first for a breakout that holds. So like when you see Apple today, what we were looking at here is this breakout. It's okay for it to pull back, but we want to see something that bases and then re-gears like this, you know, just kind of pulls back and then takes off again and makes another high. That gives you that confidence, like, okay, you know, they bought the dip on this stock. They want to drive it higher. And then you start looking at your upper resistance levels. That hasn't happened. It just does the same thing as the rest of them. It just finds its way back to low a day. Rallies back up, tries to get back up towards high. Everybody gets excited again. Then it turns around and makes another low again. So that's all you need to know right now. Market's still weak until that issue can get taken care of. So we'll leave it at that. Like I said, it was another green day, not much. I'm just grinding out little small pieces of croutons right now, like a nibbling on crackers, waiting for the big crumbs to fall off the plate somewhere. But it's still green, still grinding out green, and that's what I can do now. Now, if you're a bear flag shorter, like I said, or you like shorting down in the hole, you're doing all right. This market's just rolling cash right to you because everything that's busting through low a day just seems to get washed out, especially first thing in the morning. So if this continues, may have to work a few of those trades, but we shall see, right? We shall see. As always, guys, if you need help with your personal trading, feel free to visit thelincolnlist.com. Until tomorrow, which will be the last day of this week. Yes, the last day of this weekend is a weekend time for all of us. Thanks for watching this Market Mutterings. I'll talk to everyone tomorrow. Take care and trade well.